The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, we're going to take a look here this morning at the German DAX. As you can see here, it started up this morning. We had some higher bottoms in there. Would look pretty interesting. For informational purposes, I understand that there's a potential that they're not going to use the auto companies for tariffs. I don't know if that's true or not, but that is what Bloomberg was saying the cause of the rally. Whether that is the case or not, I'm not absolutely sure. If we take a look at the FTSE, you'll see it was even an easier buy because we were down at the 78% level with higher bottoms. The bottoms were higher in the FTSE. That's why it made it a little bit of an easier bottom. We've had a very good rally, 160, 170 points off the bottom in the Dow Jones early this morning, but we've seen this before. We really need to get the S&P above the 2740 level for it to really get to rocking and rolling. If you take a look here, what's happened to the NASDAQ, this was just a few hours ago. We've gotten up to We've gotten all the way up to 70.91 here, which is the 61% retracement from the high back on July 3rd. So take a look at it. You'll notice that we did make that 78% retracement Friday right on the close. We did not take it out over the holiday trading last night. We got down and almost matched it and stayed there around 70.20. And then when the news started to filter out from Europe, it started to have a pretty good rally. So we'll keep an eye on that as we look through here. One market that deserves our attention, boys and girls, and that is the gold market. This happened just a little while ago. We were looking at gold. We had a 382 retracement. We went from 1239 all the way up to 1262. We backed off to a 382 retracement. We're now up $5 from that level. That's a very positive sign. Folks, if we get gold above 1262, that means the bottom might be in. So pay attention to that one because it has a very strong seasonality at that time. Speaking of seasonality, we're going to have Rich Anderson as our guest this morning. He'll be on at the break, at the half-hour break. And a very important announcement, I've been chatting with Norm Winsky, and on July 13th, Norm said the whole Bible opens up for astrology, and we're going to have a lot of things happening along with the solar eclipse that happens at that time at the new moon. So we will have him on the 13th. The new moon, of course, the solar eclipse and the new moon comes in on the 12th is what the calendar is saying, but we will have Norman in on that Friday the 13th. So, Treskai decaphobia. Fear of the number 13. Anyway, we'll be watching those very, very closely. But keep a really close eye on that gold because it's very, very oversold, and we need to watch. Folks, the market that is really under a great deal of pressure this morning is the copper. We got down to 285 in copper. That should be some type of minor support. I believe if we could put this up here, I believe that's what we were looking at. Yeah, it's right there. Hold on. I'll just get this up here so we can take a look at it. You'll see that we're down there at major support. That's the 61% retracement from the low made in April of last year. That's 18 months ago. So that must hold. You know, we hit that double top up there at 332. We've been down just about every day since that time, and now we're right at that 1285 level. So that should be some really good support. And maybe the stock market's turning here, and that could be an interesting spot to take a look at it. So I think that's an interesting one, you know, to look at it from a longer term perspective. But boy, it certainly had 3 weeks of a, you know, massive downward move. That's something that is, I think, relatively important. We've had a request to take a quick look here at coffee, because we are down in an area where we've been here several times before. This could be a double or triple bottom down here in coffee, down around this 114 level. So pay attention to that. You know, we had a double bottom back in June of last year, and the market went from 114 to 144. The one we had in April went from 115 to 126. So these can have tremendous rallies, but the key is it can't close below that 114 level. If it did that, that would signal an ABCD structure to the downside, taking it somewhere near the 110 to 109 level is what that ABCD structure would be. So sort of keep an eye on that. Now, Steve Rhodes has been kind enough to send us some information about the December corn. And December corn has a lot of support down here in this 360, 359. We've been as low as 359. We're 364 right now in the December corn. The difference is, oh, we got a caller from, speaking of corn, we've got a caller about corn today. John from Philadelphia. John, how are you?
Larry, I'm very well. Nice to hear your voice this Thursday morning.
Well, thank you. Nice to hear yours, too.
Say, before I ask the question, would you finish the thought that you were just articulating there? I'd like to listen for a moment.
Well, it's just that Steve was saying that it had a lot of support down at that level, and you were kind enough to send me a chart this morning showing the Christmas corn here, and I wanted, this is the nearest futures, but let's get this one up here so the folks can take a look at it. And then what I was going to do was to bring up the chart that I did for the December corn, just to take a look at it. But I believe we're right near, not too far from cost of production in here. Isn't that correct?
Gosh, I would think so. Well, let me ask you the question I called in to ask. Let me ask it directly, Larry. Just for you and for your Tiger TV audience, there's in the Tiger's Den a post of the monthly corn chart going back 10 years.
Mm-hmm.
And I have observed and highlight for anybody who wants to look how the time of year of this decline into July 1st is very similar to the decline into July 1st or late June that occurred in 2010. And I know today the global corn supply-demand balance was particularly weak, in other words, bearish, 2 years ago in 2016, and has been noticeably tightening since, just on slightly smaller crops past 2 calendar years and growing demand in many places around the planet. And my question to you is, with all that in mind, can you envision the possibility where a bottom occurs now and an advance like the one that occurred starting July 1st in 2010 takes place?
It certainly could without too much trouble, John. The main reason is because it's so incredibly oversold. You know, the funds were so bullish, you know, on Memorial Day weekend, and then they got absolutely massacred with a $2 drop in beans. Can you stay with us? We got to pay a few bills. I'd like to chat with you more about this because we're going to have Rich Anderson as our guest, and this could lead on to that. So stay with us, John. Will you be able to do that?
Thank you.
Okay, stay with us. Mr. Z from Philly will be right back. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back. We're talking with John from Philadelphia about the corn market. John, we were discussing whether we thought that the corn was a good buy down in this area. I personally think it is based on that monthly chart that you looked at, and then also the one that I was watching for the December corn, which is the new crop. We got as high as 73. Now we backed off again to about 64. So I believe the risk is just below, 360 a bushel. So that's the only thing I know is how much to risk on anything. So that's what I was looking at. The weather conditions certainly couldn't be any better. It's nice and hot, but it's like a greenhouse. They're having so much water.
Yes, Larry, I'll just share this with you. I repeat what I said at the top. The global supply-demand balance has tightened up dramatically in the past 2 years. In other words, excess supply sitting in the U.S. and over in China and Europe, all have been worked off because of increased demand or the combination of increased demand and slightly smaller crops. And I'll share this with you. Yes, the U.S. crop looks good thus far. Weather is now critical the next 35, 40 days with silking and reproduction going on. So what is a good-looking crop with decent amount of acres right now is subject to change if something turns adverse, like too hot. That's number one. Number two, I'll share this with you. Over in Europe, they're having not only the threat of a problem, an emerging problem, both in France, Germany, and Ukraine, Russia. And one can see it best by looking at the wheat contract that's traded over in, somewhere in France. I forget where the exchange is located. But French milling wheat futures are breaking out to new highs the past 3 weeks on a lower crop size. And whether they're now and the next 2 weeks is not good. It's forecast anyway to remain adverse. And then of course China, which we know we get poor weekly and monthly data. Evidently the situation there on that crop is not ideal. So I just am thinking to myself, there are threats that are there And with that big, huge decline, the speculators had dumped all of those longs. They bought at the highs. They dumped them at losses. And now that crowd is actually short. And that crowd is an excellent inverse indicator. So things look like you said, the trade, the low risk trade is on the buy side, and it's conceivable some bullish catalyst kicks in here in the next 30 days.
Well, we'll certainly be watching it. I want to thank you for calling in today. And if you have any questions for Rich, give us a call. We'll be happy to chat with you again. And I hope you had a great holiday there. Was it nice and hot in Philadelphia?
With Rich. Thanks in advance.
Hey, thank you, John. And we'll be talking to you soon, my friend. Okay, folks, next one we're going to take a look at here is the Canadian dollar. We've had this big break in the Canadian dollar. We've gotten down to below the 131 level. We're trading still at that level. So if you get any type of a rally here in the Canadian US, you want to be watching it for a potential sale because that's a major top, it looks like, up in that area. Now, the euro has been quite interesting because what we were watching in the euro, if you recall, this is what I keep a log on these to make sure that when we send these in, they're doing the right thing. But here's what happened to the euro. As you can see here on Friday, we were coming down into that 61% retracement at 116.30. We hit that thing spot on. And then between the 4th and the 5th, we've had a very, very nice rally here in the euro, and we've gotten all the way up to a 78% retracement of the high we made off of 118.30. So that's a pretty big move. We completed a nice ABCD pattern up there at that 117 and change. So as long as that holds, it looks like we're getting ready for a correction here in the euro versus the US dollar. But that's what we're keeping an eye on this morning as we're looking through here. Folks, the news that you get about these tariffs and stuff, it's like everything else. Be really careful because what they say and what they do are two different things. And believe me, China knows how to play the game better, as good or better than anybody else. Russia used to be great players, but with the fall of the Kremlin, a lot of those smart boys went into private practice and stuff over there and all the other parts of Europe, and they used their techniques for trading, to their own benefit, and the government doesn't do nearly as well as they used to. But the government of China, they know how to play the game. When they say they have a lot of something, that probably means they don't have very much. So pay particular attention to that. I think the biggest thing today from a technical standpoint is what's been happening to that copper, because that's a huge break in the copper market, folks, to get down to that level. I mean, it hit the 285. I mean, absolutely. Actual low was 284, and we're trading at 286 right now. So that should be a pretty good bottom. That if this doesn't hold here, the copper is going to have some real serious problems. But we hit it pretty much spot on. Let's just get this up here so you folks can take a look at it. But we've been down for 3 solid weeks from the high that we made back on June the 8th. So we're down almost a full month. And you'll see here that the last support we had for copper was at 307. And, we've come down. We're down more than 30 cents. We're down 45 cents in copper. We haven't had a 45 cent break in copper for a very, very long time. But that's a very important number there at that 285 level. And with the low being 284, I would think that would be pretty much spot on for that. So we'll keep a close eye on that as we look at the copper as it trades through this area. Someone's asked the question, do I think that the stocks are going to sell off like we've had every day that they open sharply higher, they sell off? No one knows the answer to that, folks. We really don't. And one other question that someone posed to us over the weekend, a very important question, is what happens when you have a market like the NASDAQ that is extremely strong, and you've got a market like the S&P that might be a lot weaker? Trade each one separately, folks. They are a market of stocks, not a stock market. We learned that from Bernard Baruch. So trade what you see, not what you think. Because that'll give you an idea, because when you're looking at a chart, you're looking at the sum total of all the buyers and sellers. That's what you're really looking at. And if there's more buyers, prices are going to go up. If there's more sellers, prices are going to go down. That's the bottom line. So keep an eye on that, because that's going to be the key to where these markets take you. That's for sure. And whether, talking about crude oil, whether the president has enough jawboning to push the price of oil down, you don't know that. Look at the price of oil; it's still within 50 cents of its high. You know what I mean? That's, hey, my wife has got a memory that is unbelievable. Anyway, thank you, honey. I wanted to bring something up about Mark Douglas, and that we're going to have a little segment here tomorrow about some of the things that he was able to impart with me that I think are very, very important. So let's take a little break here. We're going to have Rich Anderson on at our break. So 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Rich Anderson of Anderson Capital Management on the line. Rich, are you there?
You bet. Good morning, Larry.
Good morning, and I hope you had a wonderful holiday. But I want to put you to the work right away. You sent me a chart about cross-asset gauges of risk appetites. Can you explain to me, to the folks, what this chart means?
Well, it's taking all the interest rate kind of transactions and putting it into a risk on, risk off kind of a situation. And if you look, it was made its lows back in January. Well,
the markets were running, even the cryptocurrencies, on fear of missing out. Everything is going straight up, and since then it's reversed and gone straight up. That means risk off, get out of the way, and the markets the stock markets have kind of put in their tops in various, particularly if you look at various sectors and stuff. I mean, I'm not a stock market guy, but January kind of peaked. But it's a think of it as a risk on, risk off.
Okay.
And that's exactly what it was.
What's your feeling on the tariffs here? We're hearing something about the automobiles being taken off the tariff list. Anything that you see in the grains or anything that the folks should be able to be focusing on?
Through the years, we've always been about buy the rumor, sell the fact. I'm wondering if this isn't, buy the rumor, sell the fact, that the fact's going to occur, July 6th, and we'll get a rebound rally as all the negativity is priced into the market, and we'll start to have the possibility that we'll hear things that will be friendly, or less negative. That's what I'm thinking. I'm thinking I'm approaching from the buy the rumor, sell the fact kind of a thing.
Well, that makes good sense.
For opportunities that way.
When we take a look at the Christmas wheat market, that looks actually still has a little tiny bit of bullishness in it. It's the only one of the grains that has a little bit of a higher bottom. Do we have a possibility of a good rally here in wheat?
Well, that's based on the weather in the Black Sea. In years when Russia and the Ukraine in that area has a good crop, they export the heck out of the wheat, and we're the losers. But they've got a crop problem this year, and so whenever an exporting country has a crop problem, that's a much bigger deal than a consumption country, because when they step out of the export market, then there's other people that have to make up that void, and that's what drives the prices up on a world basis. So that's why that market's holding together. Any positive news on the trade front, and all of a sudden it takes out the highs. And look at the Kansas City wheat versus Chicago wheat. Kansas City wheat's 4 cents under. Wouldn't be surprised if a few weeks from now it's 20 cents over. But we've had some rains both here and in Canada over the fourth holiday, and so there's been some moisture in this country, but it's the Black Sea region, which most people don't follow weather there. Well, your average commodity trader doesn't.
Rich, the one that really surprises me the most, and we've been in this business together for almost 50 years, is the fact that platinum is $400 an ounce under gold. Did you ever think in your lifetime you'd see anything like that?
No, but again, one of the primary usages was brought into question when they had the big kerfuffle about diesel mileage in Europe. Platinum it has that seasonality. I think I sent you that more seasonal chart last month, and seems to have a start of a rally in July, and we've certainly had the sell-off. So any sign of a bottom, there's opportunity there because it's so underpriced.
Boy, it certainly is.
On a historical basis.
That's really good. Rich, tell us about the cattle market. What do you think here in cattle? We've reached a little bit of a top up in this area, or what's your feeling?
Well, we may have put in an early summer low. Markets these days have the tendency to retest the lows. So certainly on a retest, I'll have a lot more interest than in here. I think we're probably near some temporary resistance. If this trade thing were to go as negative, some people say, you've got to have a market for pork, and that extra protein would put a drag on the cattle. That'll be a delayed effect 2 or 3 weeks from now. So that's what makes me cautious. But the numbers are coming into balance. The big question about the tariff thing is it deflationary or inflationary? And you can make a case that it's deflationary, and you can make a case that it's inflationary. But in the case of the proteins, if we can't export it, we'll sell it domestically, and you'll cut the price. And that's, that will eventually, the chicken and the pork would cut the cattle.
Rich,
So I'm not chasing the rally. I think they're fully priced right now.
yeah, I'm beginning to believe. You remember the days when the Russians were such great grain traders, but it appears that they don't do that stuff anymore. But at one time, they were really the premier traders, as I recall back in the 70s. Am I remembering that correctly?
Yeah, they came to New York in July of 1972 under the cover that they were buying agricultural equipment. Now, they had previously contacted the Canadian government and said, we need to buy X amount of bushels of grain, and the Canadian government says, we don't have that. Call, I won't mention his name, in Minneapolis. So the guys in Minneapolis, in the grain companies in Minneapolis, were the first ones that knew that when the Russians came to New York, they're coming because they need to acquire a whole bunch of grain. And so soybeans then were below $4 and went to 12. I mean, it was a huge deal.
We were on that one, buddy. I remember that
couldn't
one.
monitor
That
the
was
weather
a big
in those other countries either.
Sure, that was back in the good old days of the wild, wild west for sure. That's when we had first met, Rich. You know that? Look how many years that's been, buddy. That's been 40-some years, 46 years.
Scary, isn't it?
Yeah, it really is. And stop and think all the people that we've known through the years. My goodness, it's just been. I was thinking of it over the weekend. with all the things that we've done, and boy, it's been a really. We just got really lucky, didn't we?
Yeah, we caught. We went with the tide. We went with the tide. We were lucky, and that's the way these markets are trading these days. It's a momentum market. They go with the tide. It's the algos and the robots. They see something that falters, starts to turn, they get on it, and that trips another one and trips another one. So you're seeing lots of momentum trading as being probably the most effective way right at the moment.
Which, how much
buy
is,
the rumor, sell the fact.
How much of this algorithm
may already be in the market. We might have some good news coming. I don't have any knowledge of it, but I'm going to assume that the market will tell me first, so that's why I watch the charts.
Well, the bad news is certainly out there. That's for sure. How much of this algorithm trading is going on in the grains and stuff, Rich? A lot?
Well, the market that I can remember sitting next to John Henry in New York one time at a luncheon.
Oh, hey, hold that thought about John Henry, and we'll be right back after this break. Okay?
All right, sure.
Okay, Rich Anderson, Anderson Capital Management. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
We're back, folks, and we're talking with Rich Anderson, and he was sharing us a story about the legendary commodity trader, owner of the Boston Red Sox, John Henry. You want to continue on, Rich?
Well, he just happened to be sitting at the table next to me, and I asked him about the cattle market. Do you ever trade that? And he said, no. Hey, he was a vegetarian, but it wasn't big enough. But these days, the algos go wherever they can, jump on the train and catch the ride. So a friend of ours in Chicago was telling me about a young fella he met that was an algo trader for one of the alphabet grain companies, three letters to its name. Yes. And his algo was in charge of trading cattle. So if the grain companies are doing it, they're all doing it. The algo community actually went to the Merc and was trying to get them to expand the range on cattle so that they could have more fun during the day.
We've had ranges some of these times. Do you remember we used to see a 2 or 3 cent range in corn for the whole week back in the early 70s, Rich? I mean, it would have a 4 cent range for the month.
I know. Yeah. By the way, the other thing that's changed in the meats is JBS. The Brazilian JBS had a little bit of a political corruption, financial problem, and they were a big player a couple of years ago, and they're not now. So power, big players and powers come into markets, and then markets tend to act similarly, and then they leave, go to a different market or whatever, and that changes the nature of how these things move. That's why you just look at the charts, and that I think the Kansas City wheat 4 cents under Chicago. Once we're starting to harvest now. Once they get through that harvest, gets tightened up, it can easily go 20 over Chicago.
Mm-hmm. You do a lot of those spreads too, don't you, Rich? As far as looking for discrepancies,
relationship opportunities.
Mm-hmm. What about the fact
then you don't have to worry about overnight something happen and you got a major problem when you wake up in the morning. But by the way, I see some of the internal indicators in the corn market as an example, telling me that maybe the worst is over. It's like when you're flying a plane, you're watching the instrument gauges. Well, some of the instrument gauges I'm watching are showing me a sign that maybe the worst is priced in, and there'll be a rebound because the bears have to continue to push it down, and all they need is a good story here or there, and it turns a little bit, and then all the algos turn, and that's what you get these runs.
Yeah, I was chatting with Cy right before the weekend, and he was telling me about about 98% of his farms had hedged their corn and beans, up in those highs into that Memorial Day weekend, mainly because of the model that they had done. That they make a very good return at those levels, so why take the risk? And of course, there's only about 3 to 4% of the farmers that decided to to play both sides, the old Texas head, long to futures, long to cash. But as I said, he said, those fellas, they're very adept at changing their minds very, very quickly, and we're able to get on the short side of it. So the whole thing is when that hedging thing tells you to hedge and you've got the money in the bank, you've got to take it. I mean, that's pretty much the way it is. You're a farmer. You do that, don't you?
Well, the counter argument to that is that very few of the very big farmers that are out there made their money by hedging. They all made it by putting their grain in the bin, and then, like I can remember one of the big farmers out our way, he probably had 6 or 7 years worth of production stored in bins, and then 1973 happened. That's how they got big.
Yeah. I know some of them made a huge amounts of money.
Massive amounts of money.
Yeah. Rich, one of our listeners is asking if you had to look at one particular trade here for the next few weeks going into the end of July, what would you look at as far as good potential?
Well, there's nothing I'm really excited about, but I guess if I'm looking at anything, I'd probably be looking at the November beans. Corn is a July market, and there's no weather concerns up to this point. We've had some areas have gotten inundated in rain, and that might put a drag on the beans. So I kind of interested that the November beans tested the 860 level and tested it again today, and wouldn't be surprised if all of a sudden they decide they want to reverse, and 50, 60 cent rallies are going to be the norm, and $10 would be resistance. So that's kind of what I've got my eye on. But I'm in invocation mode. Really don't have any positions on to speak of. But some of the internals that I'm watching are starting to look a little interesting.
One question one of our listeners is asking us is why is the hog market has not sold off like the rest of the commodity markets, even though we do a lot of pork business with China. Do you know the reason?
They looked at an October or December hog chart.
I didn't ask that question. They just asked
So December hogs are 55.85. July hogs are 83.42, but December hogs are 55.85. Now they've come down from a high of 85.27 in February 26th. And in the low 2 days ago was 53 cents. 53.05.
Wow.
Is that not come down?
Well, evidently they were looking at nearby hogs. That's the only thing we can figure that. Let's just take a quick look here.
And that's fair, but you got to be when you're asking a question like that, you've got to look at the whole survey, the whole thing. That's why in the old days, a couple of guys we knew would actually take an average of the first 3 months of hogs or cattle to give them a trend indicator.
Okay, yeah, I just posted the chart for Christmas hogs, and they've gone, like you say, they've broken quite a bit as opposed to the nearby. Rich, we want to thank you.
Put in some swings. They're probably at swing levels where they can easily get a bounce rally into, 1st of September if we get any good news. It actually looked like Wednesday was kind of a spike low. Well, wait a second. Today's Thursday. It looks like Monday was a spike low day.
Yeah, it's really strange when we have these.
As it was back on June 5th, and proceeded to rally. What was that? $6? So $6 rallies are normal. I mean that's everybody trades in the front and looks at the front, but the opportunities are often looking out in the future. That's why they're called futures.
That's why they're called futures. Hey, we want to thank you for joining us, and we'll have you on again soon, probably sometime around that lunar eclipse, around the 27th of July, possibly. How's that?
All right, sounds great. I can't believe how hard you work. You have a great day. Trade well.
Oh, it's fun. What are you talking about, working hard? Never worked a day in my life.
I know.
Hey, thanks for you haven't either, Rich. Anyway, we'll have Rich Anderson on again. Thanks for joining us, Rich Anderson of Anderson Capital Management. And we got here's a perfect example. We got the Nasdaq going straight up and the Dow coming straight down. The Dow's dropped 150 points from the high, and the NASDAQ's making new highs. So there's a perfect example of trade the market that you're looking at. That's really a good example because, who knows? It's a market. There's, 20 stocks in that NASDAQ 100 to make all this work out of the 100. So it's hard to fade it. So anyway, that's what we're watching here. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and what we're going to do is remind you that these markets that go straight up, like the NASDAQ going up and the Dow Jones going straight down, that's related to the stocks in those things, folks. With the Dow Jones, you're only looking at 30 stocks. They're price weighted, so 15 of those 30 can make it go down. With the NASDAQ, you've got 100 stocks, and they're all cap weighted, and so the big ones make it go up, and nothing you can do about it. So you got to look at each one separately. Just because Dow Jones goes down, the NASDAQ has gone straight up. We dropped 150 points in the Dow Jones, and we rallied 30 points in the NASDAQ. Now the NASDAQ's backing off a little bit. But what's going up, if you're short, that doesn't give you that warm, cushy feeling that you like to see. Longer term, these patterns are still relatively bearish. They haven't really done anything, to damage anything. We have to get the S&P above that 2750 level. We haven't done that as of yet. So anyway, that's basically what it looks like. And we're having some good volatility, which is great. And the news coming out of these places can change very, very quickly, like we saw last night, that there's a possibility that there's not going to be any tariffs on automobiles, if that's going to be the case. But we don't know that. Keep an eye on the corn, because we've got a good chance here for a bottom in corn. We're going to be watching that, very, very closely, because it does have some really good bottoming formation patterns that look quite a bit. If you get the newsletter, make sure you look at the long-term charts, because it shows the December corn at that really strong level that we're watching. And it's going to be quite interesting. If you take a look at it here on the long-term monthly chart, you'll see that we're making that 135 pattern on the corn. It's just really spot on. We're about 5 cents higher than when we posted this, but that is a 135 pattern, on the monthly chart, and it has cyclical parameters too. So all of that, I think, is relatively important. So live every day in an attitude of gratitude, and may God bless, and we'll see you on the flip-flop tomorrow.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.